Have you ever wondered why some people seem to effortlessly build wealth while others work twice as hard and barely stay afloat? What if I told you that most of us have been playing a financial game without ever learning the actual rules? Today, we're pulling back the curtain on the monetary system that controls your life. And by the end of this episode, you'll understand why financial freedom feels impossible for so many. Let me start with a question. What exactly is money? If you said it's a medium of exchange, you're technically correct, but you're missing the bigger picture. Money, at its core, is nothing more than collective trust, a shared belief that these pieces of paper or digital numbers have worth. Think about the dollar in your wallet. It has zero intrinsic value. You can't eat it, build a house with it, or use it as fuel. Its entire worth depends on everyone believing it has worth. The moment society loses faith, it becomes worthless. History is littered with currencies that collapsed when trust evaporated, from the German poppy mark in the 1920s to the French assignat during their revolution. This brings us to a major revelation. When you receive your paycheck, you're not actually getting wealth. You're getting a promise, a claim ticket that says you can exchange this for real goods and services later. But promises can be broken. Now here's where it gets interesting. A small group of people figured out centuries ago that if they could control this trust system, they could control everything. They created institutions and banking systems that made money seem mysterious and complex, ensuring most people would never question how it really works. This leads us to the banking system that governs your life. When you deposit money into your bank, it doesn't just sit in a vault. The bank lends most of it out. This is called fractional reserve banking. They only need to keep a small percentage on hand. This makes the system inherently fragile, always susceptible to a bank run if enough people lose confidence and try to withdraw their money at once. But here's the part that will make your head spin. Banks create new money every time they make a loan. When someone gets a mortgage, the bank doesn't pull money from existing deposits. They literally create it digitally by typing numbers into a computer. This means that most money in our economy exists only as debt that someone owes to a financial institution. Let me paint this picture more clearly. Imagine every dollar beyond physical cash exists because someone, somewhere, is paying interest on a loan. If borrowers suddenly stopped paying, massive amounts of money would simply vanish from the economic system. Your salary, your savings, much of it only exists because other people are successfully servicing their debts.
This creates a system that requires constant growth and perpetual debt expansion. Here's why. When a bank creates $1 million in loans at 5% interest, they've injected $1 million into the economy. But they've also created an obligation for borrowers to pay back $1,050,000. Where does that extra $50,000 come from? It can only come from more loans, more debt creation. This isn't an accident. It's the fundamental design. The people who architected this understood human psychology perfectly. They knew most people would rather feel wealthy while carrying debt than feel poor while being financially free. They created a culture where borrowing became normal, even encouraged. And the numbers don't lie. As of late 2025, the average American household carries debt exceeding $154,000. The national debt has ballooned past $38 trillion. We're seeing the cracks appear, with credit card delinquency rates hitting a 13-year high. Yet most people blame themselves for their financial struggles, never questioning if the game itself is rigged. But the psychological manipulation goes much deeper. The system created powerful status mechanisms that make expensive consumption feel necessary. Money isn't just about survival anymore. It's about signaling your place in the social hierarchy. The house, the car, the latest smartphone that costs more than some people's monthly rent, these aren't just purchases. They are statements about your worth as a person. You weren't born craving these expensive status symbols. This desire was carefully cultivated through advertising, social media, and cultural messaging. The most brilliant part of this system is that it allows you to have these things immediately, before you can actually afford them. Debt becomes time travel for consumption. You get to feel successful today and pay for it over the next 3 decades. But here's the trap. While you're making those payments, you can't afford to take real risks. You can't quit the job that's slowly killing your soul. You can't start the business you've been dreaming about. You're not locked in chains, but you're imprisoned by comfort and monthly obligations. The people who truly benefit understand that indebted people are predictable and controllable. So they create increasingly complex financial products designed to extract maximum fees while keeping you confused. Overdraft charges, sky-high interest rates, credit card minimum payments engineered to keep you paying interest indefinitely. The complexity isn't accidental.
It's strategically designed to make you blame yourself when you struggle. Now let me show you how people who truly understand money operate differently. They don't avoid debt entirely. They use it as a strategic tool. When average people borrow, they borrow to consume. They buy cars, take vacations, purchase things that lose value immediately. Their debt increases while their assets remain unchanged. Wealthy people borrow money to invest. They purchase real estate, start businesses, buy stocks that generate income. Their debt increases, but their assets grow even faster. The interest they pay is often tax deductible. So while you're paying interest with money that's already been taxed, they're using tax advantages to fund their wealth building. This is where compound interest becomes the most powerful force in finance, but not on your debt, on their assets. If you invest $10,000 at a 10% annual return, after 40 years, you'll have over $450,000. But here's the catch that keeps most people trapped. You need money first to invest. And the system ensures most are too busy servicing debt to ever accumulate that initial capital. Wealthy people often start with generational wealth, giving them an enormous head start. By age 30, their assets are already generating passive income. Meanwhile, the average person doesn't start getting ahead until their 50s, right when they need to prepare for retirement. The mathematical odds were never designed to favor you. Understanding this system doesn't magically free you from it, but it accomplishes something far more important. It allows you to stop blaming yourself for being trapped within it. And that psychological shift changes everything. Once you understand the rules of the game, you can begin making different choices. You can't completely opt out of the monetary system, but you can refuse to participate the way it expects you to. You can decide that signaling wealth you don't possess isn't worth decades of debt payments. You can choose to consume only what you can genuinely afford. You probably won't become a billionaire, but you could build a life where money serves your goals instead of controlling them. The system will continue operating exactly as designed, but your relationship with it can fundamentally change. You might not achieve enormous wealth, but you could achieve something equally valuable: financial peace. The ability to take risks because you're not drowning in monthly payments. The freedom to pursue work that fulfills you rather than just pays the bills. So now you understand how money really works, the invisible architecture that shapes your financial reality. The question becomes what you'll do with this knowledge. Will you continue playing by rules written to benefit others, or will you start writing some rules of your own?